Right now, while most investors are chasing the same overpriced tech stocks, 4 under-the-radar opportunities are setting up for potentially explosive moves. That's what Winston just said to me. He's in charge of sniffing around stocks, large nose and all that. They were literally talking about a Bitcoin miner trading 25% Wall Street's target, a biotech stock with 0 debt and lots of cash, and a pharma giant with a blockbuster drug growing very rapidly, and a rare earth lithium play trading at just 1/3 of its book value. By the end of this video, you know exactly which 4 stocks these are, why they're positioned to potentially surge, the exact price levels where smart money is getting in as well. My name is Felix Prehn. I'm an ex-investment banker. That was Winston back there. And I'm also the founder of the Goat Academy, where we've helped over 20,000 students so far, and the co-founder of TradeVision.io, where we make Wall Street level data and news available to you. So today I'm going to break down 4 stocks across different sectors: crypto, mining, biotech, pharma, and lithium. Why? Because I see these sectors as the ones most likely to rally over the coming weeks. No meme stocks here, just real companies with real catalysts trading at prices that probably won't last. Now, before we dive in, here's how this works. I'm going to give you the ticker, the exact entry price, the catalyst driving it, and why Wall Street is positioning for upside. I'll also show you the risks, because every trade has them, and how to size your position intelligently for that, if I can pronounce that word. So let's start with the most explosive sector right now, Bitcoin mining. The first stock on our list is ticker symbol CLSK, CLEANSPARK. It's a Bitcoin mining play that is on fire. Bitcoin smashed through $125,000, all-time high and all of that. And it's a game changer for miners. Why? Because when Bitcoin rallies, miner profitability explodes. They're producing the same amount of Bitcoin, but each coin is worth way more. And this isn't some fly-by-night operation, by the way. They brought in $344 million in revenue the first half of this year. That's real money, real scale. And even Wall Street sees it. And those guys are not exactly super bullish on crypto. But even this is a stock trading here at $15. They have a $20 plus price target on this. And if you look at the chart here, you can see it's been popping. And you might be thinking, oh, therefore it must be too late. No, actually, it's just about right. Because yes, the stock is rallying up here quite nicely, but you see that it's rallying up here quite nicely. But what we actually want is a stock in a rally, because this thing went up, it went down, it went up, it went down, and now it's breaking out of that resistance here. It's gapping up, and it's looking just beautifully. And if you look at the volume at the bottom of the screen, flat, 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 heartbeat, right? So there is actually some money flowing into this, and that isn't random. It's institutional money starting to position. So when you see volume spikes with price going up, that is your signal that smart money is accumulating. So what's the entry strategy here? I'd love for this to pull back. I'd honestly love for this to pull back and retest the recent highs, which are basically at $15. That would be my sweet spot entry. I might not get that. So if instead it actually breaks out above the recent high here, which would be about $16.50, I'm also very happy to buy it on the rally. Because if Bitcoin holds above $120,000, we got some really, really, really good room towards $20 plus here. Bitcoin, of course, is volatile, right? Miners get crushed if it drops. So it is a momentum play. You're betting on Bitcoin's strength. You're getting more reward than in Bitcoin. So what's the key here? Well, don't go all in on some Bitcoin miner, right? So what we're going to do here is, and again, I'm not telling you what to do. This is a hypothetical thing, and you see we're playing with $1,000 here, not something that will bankrupt most people. So for me, put a quarter of the money into this. $250, not for you, but for me. And therefore we are risking, yes, 25% here. This is aggressive, but it's manageable if the other 3 stocks balance out the risk. Now, maybe you want to learn the exact system to find the setups like this before they explode, in which case I'm going to run a free training for you, where I will teach you how Wall Street finds winning stocks and how it uses AI to do so more and more, and how to use those tools yourself on Tuesday, 9 p.m. Eastern time at felixfriends.org/training. And if I look at some of the stocks we've picked and actually done YouTube videos on, so this is real public proof. I also do others, obviously, that we don't do YouTube videos on. We're doing pretty nicely here on the gains. And by the way, the only big loss here, we never allow a 30% loss. Again, that's just called risk management. But we have a lot of really, really, really nice winners here on that list. And this is just the last 2 weeks, right? You go back down and you see a lot more of those. That's basically what we do here. We look for good stocks. So the link is down below in the description. felixprehn.org/training. Grab yourself a free seat and be on time. Now let's move on to stock number 2, which Winston still sniffed out. And this is a biotech stock. There's probably one sector that I love above all sectors right now, and it's biotechs. This stock is called ORIC. ORIC, ORIC Pharmaceuticals. It's an oncology-focused biotech. And oncology is dominating the whole biotech deal-making space in 2025. So a huge chunk of total biotech M&A volume and value flowing into these cancer drug companies, well, it's into these kind of stocks. Why? Because cancer treatments are where the big pharma money is going. It's the hottest space in healthcare, apparently. And ORIC is different from 90% of biotechs, which are just batshit crazy high-risk plays. These guys have $283 million in cash, and they have 0 debt. So they're going to survive. Most biotechs are burning cash, diluting shareholders every quarter. These guys instead have a runway for years. What can they do with that money? Well, they can do their clinical trials. They can basically create drugs and value without begging investors for more money. And that's generally speaking where you want to be. What about the Wall Street lot? Well, 8 of the 10 Wall Street analysts covering this actually have a buy rating on this. Stock's trading at $11.50, and the average price target is $17.29. Now, that's the target. That's the now. I don't pay that much attention to Wall Street price targets, but I know some people do. It's a 40% upside, right? But the technical setup is actually very, very, very good once again. So it's a textbook setup where the stock has consolidated here since July. It's basically pulled back pretty harshly. It recovered back up above this yellow line here, this 50-day moving average line, bounced back up. It's now retracing, and it's giving us that kind of sweet spot to get in on this before it takes out the recent highs that we've seen in July and once again in October. So what's the catalyst? Well, they're advancing multiple oncology programs. Any positive clinical trial data could send this thing into a parabolic move, because the beautiful thing with biotechs is they move very, very, very quickly. This thing was once trading at $40, right? 4 times higher. So the risk, the trial fails, stocks get hammered. If it succeeds, it could double or triple your money overnight. And that's basically it. So what am I looking at? I'm looking at taking out the recent highs here at sort of $12 and a bit. So somewhere like $12.20 or something like that's where we're going to get in on. Hopefully we're going to see the institutional volume follow, which is that confirmation that we want. And if you want to be a bit more cautious on this, well, wait for it to go to 13 and watch for the volume. You're a little bit late, but you're much safer, right? What about risk management? Well, again, it's all about position sizing. If you spread your money about across different sectors, yes, you're still going to have some risk, and we might want to set some stops on this like everything else. But if we, again, just put a quarter of this magical $1,000 into this, you're betting on clinical success, maybe M&A potential, but you're also expecting that, yeah, it could go down minus 20%, right? In which case, well, you haven't lost that much because you only put a quarter into it, so your overall loss is 5%. And that's biotech. It's high risk, it's potentially high reward. I think this is the golden era of biotech for the next couple of months. So we're going to look at one more, but this one is a lot more of a safer play. This is called REGENERON Pharmaceutical. Ticker symbol is REGN. Pretty sure I've talked about this before. Let me see if it's on our list here. Nope, it isn't. Okay, maybe I just bought it before. This is a large cap biotech. So this isn't some teeny tiny, working out of a garage kind of a setup. It's a big, big company. They're innovating. they're growing and they're not dependent on one drug. They have a blockbuster drug called Dupixent. I don't take any drugs at all, by the way. If you know what these things truly are, if you're on them, let us know in the chat. Sales on this thing are up 23% year on year, which is pretty good. Bringing in almost $4 billion in the last quarter. $4 billion in one quarter from one drug. And these guys just got approved for a new illness. Well, maybe not a new illness, but it newly got approved for COPD, which is a massive new market, potentially billions more in revenue over the next few years. So this is one of those, hope and pray biotechs. This is a cash machine. And Wall Street also sees the potential. Trading as at $600, Wall Street has a price target of, wait for it, $1,053. Yes, $2 and no sentence. So that's some pretty significant upside. It's about 70% upside. And yeah, analysts are mostly numbnuts, sheep and all that. But even if they're a little bit wrong, we could still be looking at some nice upside here. So it's the kind of risk reward that makes good sense for large cap. But there is more. They have another drug which is called LITHIUM. That's also grown to almost $300 million just in the last quarter. Another growth driver most people are not aware of. So you've got multiple growth drivers, multiple stocks, not one product, and yes, a pipeline. So what's the entry strategy here? For me, it's just taking out the recent highs here. So something like a 620 entry. I'd also nibble on it on a pullback as it hits our 50-day moving average line, because that's been a pretty good strategy so far. It's going to be less volatile than most of the other biotechs out there. So once again, allocation to this in my hypothetical portfolio is $250, as in a quarter of the money that's lying about. Risk is lower, but the upside is still pretty significant. And then stock number 4, and this one's really exciting. Remember lithium from the good old COVID days? This is one of those. The ticker symbol is lithium. Argentina, land of silver. Ticker symbol is LAR. Not to be mixed up with LAC or one of those, it's LAR. Why does it matter? Well, lithium mining is the backbone of the EV revolution. And yeah, I know there's all sorts of new technology, but at the moment we still need tons of lithium. And demand for battery metals is growing as EVs and grid scale projects, storage projects, batteries are becoming the thing. So if you believe electricity is the future, you basically need some lithium. Now, here is what's actually insane about them. LAR is trading at 0.36 times its book value. What does that mean? The accountants think it's worth 3 times more than what it's trading at, which is a massive discount. So it's a deep value play. You're basically paying 36 cents and you're potentially getting $1. So if lithium prices rebound just modestly, this baby could rip bigly. See where I'm learning my English, right? You're el presidente. And they're doing really well, by the way. They're ramping up production, 18% growth year on year. Costs are dropping, higher output, lower costs. That's kind of essential if you're in mining. So what do analysts think on this? Analysts essentially are saying the lithium prices have bottomed out. And that's what we're seeing here, because this thing was trading way, way, way higher, right? But buy and hold, they say, right? Buy and hold. Yes, buy and hold. Imagine you bought this at the top of the market in 2021. Well, you'd only be down 89%. Buy and hold a little bit longer and you'll be dead. But if it just recovers somewhat, we could be looking at like a couple of 100% returns. So when lithium prices start picking up again, and most people that I talk to think we're somewhere near the bottom, then, well, we've seen the movie before. We've seen it with oil, we've seen it with copper, we've seen it with gold, we've seen it with silver. The commodity cycle is what? It's a cycle. And miners amplify that move, so potentially we make more money. So what's my in here? I'd love for this to pull back a little bit, just because it's such a volatile stock. And if you look at how it moves up and down, up and down, up and down, up and down, up, right? So somewhere in that $3.70 range, something like $3.70, that would be kind of my sweet spot entry. Why? Because I like to buy this at a little bit of a discount. For me, it's a bit of a longer term play on lithium. You could, of course, also buy it as it goes lower. Watch the 50-day moving average line, though. That's kind of your key support. And if it really just breaks out above the recent highs here, then that's equally good. but it's a speculative play. So again, you want to be careful and cautious. You don't want to put all your money into it. So that's why, again, we're putting a quarter of this mythical $1,000 into this, betting on a commodity rebound and execution, and the fact that Wall Street is loving it, because that down there, my friend, is Wall Street buying our stock. So it's an asymmetric play where we potentially have a 3 or 4x opportunity. So how do we put this all together then? Let's do a little bit of learning here. So we got $1,000, right? And what are we doing? We're allocating them across 4 stocks. So we've got some of it in essentially Bitcoin, CLSK, right? But a minor play on Bitcoin. We have some of it in a pure play biotech, because biotech is what's booming. And then we have another quarter of it in REGN, which is a large cap, more stable growth anchor. And then we have our 4th quarter in LITHIUM Argentina. Now, of course, you don't have to buy these things. These are just the basis of your research. But we're diversified across sectors, market caps, risk profiles. We've got crypto exposure, biotech, pharma, commodities. So if one sector gets crushed, the others can offset the damage. Even if 2 of these hit their target, we're looking at some serious gain. So the key is always don't blow up your account chasing one stock. Equal weighting forces discipline. You're not betting the farm on a single idea. And if one stock starts working, you can add to it with profits from the others. And then, of course, very, very importantly, I always preach this, we set stops, stop losses. Now, these are higher risk plays. So you could have your stop loss at 10%. Maybe you want to set it at 20% or somewhere in between, or maybe you want to actually learn how to do that properly on a chart, in which case you got to join one of my live sessions, link down below. But you do want to set one. You don't want to leave it up to your emotions, because they're going to screw you over. So we've got Bitcoin at an all-time high, so miners benefit. We've got biotech M&A recovering massively, benefits ORIC. We've got pharma innovation, which is just tremendous for Regeneron. And then we got lithium bottoming out, which could be really good for AR. But we are in a market where sector rotation is happening very, very fast. Money is flowing from overvalued tech and into undervalued growth in commodities. And these 4 stocks are in my presently favorite sectors. We want to understand how we find those, how we deal with those. Come and join me Tuesday at felixfrenzel.org/trade. Training. felixfrenzel.org/training. The link is down below in the description. It's a good job. I've got someone who makes those notes, right? So write down the 4 tickers: CLSK, ORIC, REGN, LAR. Start your research. Set a price alert in Trade Vision. You can do that there. And if you do decide to invest, make sure you write down your research. I like a good old notebook. And then make sure you've got your automation set up. And if all of that is a little overwhelming, come and join me on Tuesday, felixfrenzel.org/training, and we'll make it as easy as throwing a ball. You kind of need someone to teach you how to throw a ball well, actually. It's about the same thing, really. So I'll see you there, and I thank you for watching. If you hold any dollar assets, your savings, your 401ks, your bonds, what I'm about to reveal could either protect your wealth or leave you financially devastated. A Russian economic advisor just exposed what he claims is America's secret plan to eliminate $37 trillion in debt overnight.